good evening to all. It is the end of the month, and that brings us to talking about everything money.
From having seed banks to getting a bag of salt as monthly wages, to using cocoa beans as currency, and even taking selfies to make payments, the financial sector is an ever changing arena.
To keep up with everything fintech, Tether brings you to another event, the role of NBFCs in India's $5 trillion economy aspirations. I am your host, Abhikant Bharadwaj.
I'm your other host, Vaishnavi, and we welcome you all once again to today's virtual panel discussion.
But before we jump in, we would first like to introduce Tether. Who are we?
In a nutshell, we are fintech enthusiasts, but there's much more to that. Tether was conceived by like-minded individuals with backgrounds in the financial services ecosystem. In addition to being a converging point for all things fintech, Tether is a space to learn and grow. The community also functions as an open forum where participants can reach out to industry experts, making the whole community a lot more bigger.
It is definitely your clarion call to just join the community now. Whether you are a fintech startup looking for investors or a fintech enthusiast wanting to stay updated with the latest in the fintech world, Tether is the place to be. Presenting to all of you a small glimpse of Tether through a video.
The strength of the wolf is the strength of the pack. The strength of the pack is the strength of the wolf. Since our founding, M2P has wanted to give back to the community we grew from, which led to the birth of Tether. Tether is a community for like-minded people from across the globe. This includes startup founders, fintech professionals, students, and enthusiasts. Tether, with thousands of members like you, will act as a catalyst in the growth of the fintech industry. Tether also acts as an open forum where participants can reach out to industry experts, learn, and grow. You can achieve mentorship from industry leaders, mentorship for funding, an opportunity to network with peers, and access to a world of events apart from a host of services. Join your peers today. Grow together, tether together.
Awesome. So please log on to tether.community to become a member now. I mean, maybe not right now, maybe after this webinar, but the link is now available in the chat section of the screen.
Well, talking about the financial sector, the non-banking financial companies are an essential source of financing and will continue to play a key role in taking the Indian economy to a whopping $5 trillion. So NBFCs have mastered the art of banking the unbanked segment of the society in both urban and rural areas.
A deep-rooted understanding of the customer, the local geography, and prevailing market dynamics across various regions, coupled with the flexibility in operations based on the borrower's needs, have been the key elements of their success. Policymakers have been taking steps to alleviate the problems in the NBFC sector. To throw some light and share their experience, we have a wonderful speaker joining in us today. Let me introduce our first speaker, Mr. Indrajyothi Bhattacharjee. Mr. Bhattacharjee has around 20 plus years of experience. Hello, Mr. Bhattacharjee. I'm just going to take a couple of minutes to read through the illustrious career that you have had. As I was saying, Mr. Bhattacharjee has around 20 plus years of experience in banking in all cross functions from credit, product, and sales. He has also dealt with clients across geographies and supply chains with excellent knowledge of all assets, trade, and liability products across sectors from corporate, government departments, state, and central PSUs, financial institutions, NBFCs, realty, startup, mid-market, and small businesses. I'm almost out of breath reading through that list. Such an illustrious career, Mr. Bhattacharjee. It's my pleasure to welcome you here.
Thank you so much, Abhikant and Vaishnavi. Thank you for having me here and giving me this opportunity to share my views to all of you. Thank you so much.
It's our pleasure.
Superb. And now please put your hands together for our second speaker of the day, Mr. Prabhakar Bobde. And he's currently serving as a managing director and CEO at Sustainable Agro Commercial Finance Limited, and he has 32 plus years of experience in the banking sector. He worked previously at the Bank of Maharashtra in different positions, and he also worked with Axis Bank, where he handled the pan-India agri-business. And along with that, he's worked in commodity finance and business banking with HDFC Bank. The last 4 years, he spent in the leadership role in NBFC. So please put your hands together and welcome Mr. Bobde.
Thank you, Vaishnavi. Thank you, Avikant. Thank you for having me here.
Amazing. Now let's put your hands together again for Mr. Sharad Jambukar, who has kindly agreed to moderate today's event. Sharad Jambukar is the CIO of Aadhaar Housing Finance. He's an established IT expert with a strong passion for digital transformation and innovation. In addition, he has played a key role in the implementation of large IT programs in the BFSI domain and served as a mentor for several tech startups. Recently, he secured Banking Frontier 2021 for his organization. He has worked previously with Tata Group, ICICI Bank, L&T Finance, and SBI Capital. Welcome, Mr. Jambukar.
Thank you, Avikant and Vaishnavi. Thank you very much.
It's definitely our pleasure. Everyone, before we move on, a quick note for the audience. Any questions you might have for the speakers, please share them on the Q&A section at the bottom or on your right-hand side of the screen. We shall have a short Q&A session afterwards. On that note, let us flag off the event, and we are handing it over to Mr. Sharad Jambukar to take this forward. The stage is all yours.
Thank you, Avikant, and thank you very much for hosting this nice and important event for the economic discussion on NBFC's contribution. I would like to start with some information about the Indian economy and the NBFCs. So while we look at the all world economies, Indian economy is growing at the highest GDP growth rate amongst all the countries. And not only that, it has reached to almost GDP of $3.1 trillion US. And we are just shuffling for the 5th rank across the world economies between UK, France. So I think that is the biggest achievement as a country. We are all proud that we have accomplished since our independence. And I think in all the economy, when we consider the land, labor, capital, these are the 3 important things while we studied economics at the beginning age of our economics studies. Out of that, capital has been very, very critical and important, I will say, blood for the economy to grow. In this context, when today's topic is, when it came, the role of NBFCs in our 5 trillion economy aspiration, I was very much impressed and I was interested that yes, this is the topic which is where my passion has really helped me to excel with the help of technology. So coming to this point, for the audience, I think in our economy, Indian economy, apart from banks, NBFCs has certainly played a solid contribution over the last many years. But along with that, when we look at NBFCs, are they really growing today? Or are they growing more than banks? Or are they more profitable than banks? Are they good companies for the entrepreneurs to set up? And what are real challenges the NBFC fraternity is really facing? Growth, the cost optimization, and then compliances. All these are the key themes. But I am sure with the 2 career bankers with us on the panel today, we will be able to unfold lot of stories as well as knowledge about the NBFC space during our panel discussion. So coming to the NBFC facts, which I would like to share as we begin. In India, we have more than 9,500 NBFCs operating as of Jan 2022. And for all NBFCs, total asset put together, it would be around 25 lakh crores, rupees 25 lakh crores as a balance sheet these NBFCs are running with. there are approximately 12 types of NBFCs as per RBI's classification. Typically, investment and credit companies, the finance companies, and then development finance companies, infrastructure finance companies, then factor NBFCs in microfinance, then P2P lending, then asset reconstruction companies, and mortgage guarantee companies. Account aggregator is a new addition to this list, and housing finance companies, of course, which are also important as far as our shelter needs are concerned for the human beings in the economy. So there are, out of 9,500, 9,123 non-deposit taking NBFCs are these smaller NBFCs, whereas 292 NBFCs are having their turnover more than 500 crore, and they are considered as non-deposit taking but systemically important NBFCs. Then the very important NBFCs which are typically contributing to the whole share of 25 lakh crores are these systemically important NBFCs which are more than 500 crore or larger turnover, and very managed by the large industrial houses, large corporates, and the large deep pocket entrepreneurs. Whereas the smaller companies which are into this particular bottom of pyramid for the NBFCs can be considered as almost 9,000 companies. They contribute around 2.3% of the total 25 lakh crores turnover of the NBFCs. And these are the important NBFCs which are actually deep rooted, and they are reaching to the masses, and they are doing their job of really developing the economy. So we would be talking about these NBFCs, their challenges as we discussed. So now coming to these questions and seeking these knowledge from our panelists, we would like to open the discussion with Prabhakar sir as important. He has seen as a banker over last 30 years very closely as a competitor, NBFCs as a competitors as they were growing stage. And now he has been at the helm of affairs of the NBFCs. So now, Prabhakar ji, I would request you to share your views on NBFC's role in economy and short comments on various benefits that NBFCs are bringing to the economy.
Yeah, thank you. Thank you, Sharad. Thank you for having me. As you already told, there are 9,100 NBFCs which are taking care of 2.3% of the exposures. So distribution wise, there are 9,100. That means almost more than 85% or 90% number of NBFCs taking care of the total portfolio of only 2.3% of the total exposures. But if you look at the number of client-wise or a client distribution, it is huge. Your 28 NBFCs, which are covering 83% of the exposure, is having hardly some lakhs of customers. But this 2.3% of exposure by 9123 number of NBFCs are taking care of almost a number of millions of the customers, because these are microfinance institutes, these are small small NBFCs working into rural semi-urban area where branches cannot go. As all of us know that there are almost 50,000 bank branches in India for 5 lakh villages. So banks cannot reach to the last mile of the pyramid or last bottom of the pyramid. So NBFCs do reach there. Earlier NBFCs were working with the small branch models in semi-urban rural branches where branches cannot go, so that it was a niche area for these NBFCs to get the business as well as service the business. After pandemic, most of the NBFCs learn how to work in these areas without the branches also and reduce the cost. So their non-deposit taking NBFCs have got that benefit that they can push push their business, they can get a growth in this area and achieve better profitability for these NBFCs, because these are small NBFCs having net worth of 10 crores or 2 crores also. As per RBI guidelines, you should have minimum of 10 crores of stake. So these small NBFCs, they start from 10 crores to up to 500 crores of portfolio. They have a lot of potential in this part of the area, because bankers don't reach there. Even private sector banks, I don't think they thought of reaching there directly, but yes, they can reach through co-lending now. So this is one of the factor NBFCs share from the Indian economy. They almost they take care of 50% of the retail portfolio of the total net credit of the banking industry or financial industry, I'll say. So 50% of the retail portfolio is created by these NBFCs, like gold loan, two-wheeler loan. Why? The reason being, these people who are there in this part, they know the area, as well as they have different capabilities to handle the area. Maybe they are not that educated compared to the banking sector, but the ground people, they have a better acumen to handle this client and service this client. That I can put it that way. So that is the reason NBFCs are into this area. And
Correct, sir. Sir, I think that is very well said, that how NBFCs are actually reaching to the masses and the deep-rooted areas in the countryside, as well as where banks are not able to reach, and they are filling that particular gap. And that is why NBFCs are really making the credit reach to the underserved and unserved population. I think that is very good. So with these your inputs, I would like to take Indrajyothi sir's view on the typical benefits which he looks from the NBFCs towards economy, maybe on employment, how NBFCs are able to do the, expand the employment, as well as the credit to the masses. Maybe with his lens, we would be able to get some other insights.
Thank you, Sharad. See, there are three aspects which I thought I should bring up today. One is, by construct, NBFCs don't have access to low-cost funds. That is by construct.
Right.
So, unless they come up with innovative, agile business models, it is not possible for them to survive. On a cost basis, banks will always be cheaper than NBFCs.
Right.
So, therefore, the USP that needs to be created by each NBFC is unique. This has resulted in very interesting business models wherein the NBFCs were able to develop niche segments, niche geographies, niche products, and take them to people which were hitherto left out of the whole banking or formal credit systems. Now, if you see, India is around a $3 trillion economy approximately.
Yes.
And in the next 2 years, the government has very ambitious targets of making it a $5 trillion economy. Now, if you dissect the need, this is possible only if we have a very efficient credit distribution system, which will enable the entrepreneurs, because India, whether we like it or we don't like it, we have to accept the fact that this is our entrepreneurial country, wherein formal jobs are very few and wide apart. The very fact that this country is entrepreneurial, despite challenges, we are able to move ahead. Now, just imagine if we have to be a $5 trillion economy, these large sections of entrepreneurs need to drive their machines through capital. And what better way is, if we look at our current ecosystem, NBFCs are more poised or more geared up to take this and take it across the masses. Now, this is the most critical element, I would say, for India to develop as an economy. This will have a multiplier effect in terms of jobs created. It will have a multiplier effect on the services that is being provided, and thereby the economy moving out. Now, there is other two aspects which I thought I should bring in. Now, even the current ecosystem, if you see the interesting developments that are happening, one of the interesting things which are happening is the technology, ability of technology to scale distribution networks. This was very clearly seen in the pandemic. Now, if we see in the pandemic, most of the formal organizations, namely banks, had shut their services to the entrepreneurs, especially the MSME and the rural segments. But if you see the RBI data dated 2020, you would see that the contribution of NBFCs has actually been as good or as bad as the banks, contributing almost 50% of the net credit that was distributed during pandemic. So this speaks volumes of how the NBFC sector has evolved in the last decade or so. Thereby, whenever there are calamities, etc., it is this sector that many people look up to for their credit needs, and this has become the choice of the masses. So I think these are the facts which I thought I should present.
Yeah, I think you have rightly made a very critical point where NBFCs are actually making credit available to the large masses as well as the interiors, which is typically the right words you use through niche segments. Even though cost of funds is very high for them, they are also able to focus on a particular geography. And I think that is where NBFCs are really playing a crucial role in the economy. I think so. We all agree that NBFCs are playing an undoubtedly a greater role in along with banks, because banks we really can't ignore, because banks are also supporting NBFCs to a certain extent when it comes cost of funds to be supported for NBFCs. So coming to the next point, while there are 9,000 plus NBFCs which are into the small and medium segment, and they are doing their jobs of giving employment to the our manpower, so that manpower becomes credit aware, as well as they are able to support the credit needy people. And not only that employment generation, but at the same time mobilizing money which is idle at one location to other place and making it productive is, I think, very important role NBFCs are playing. So when we look at NBFCs now, as currently you are both of you are at the helm of now affair of the NBFCs, where daily activities of NBFCs, then the quarterly results and the annual achievements of the NBFC. As an NBFC, you are closely looking at versus a bank. So what I would like to now get enlightened from you is about the key challenges observed by NBFCs. So I would request Prabhakar sir to highlight top 3 challenges which NBFCs are facing today in today's marketplace, because there are many events which has happened in the past 18 months, including the largest and saddest event of the pandemic, then the Russia-Ukraine war, then the oil prices increasing and the inflation touching sky high. So in all this context, as of now, when we see how you are looking at NBFC challenges and what are the top 3 challenges comes to your mind?
Okay. Biggest challenge for the, I'll put it in 3 ways. First is we have faced IL&FS crisis in 2018, then After that, we faced pandemic from March 2020, and our first lockdown, then second lockdown. First lockdown was, I will put it as better because the government has came forward and restructured loan of the borrowers, not of the NBFCs, but for the borrowers, at least good for the borrowers. Then second lockdown, nobody has came forward, not a government, nobody. So SMEs has faltered, and they have to shut down some of the small SMEs. They have to shut down the shops, which has challenged the cash flow of some of the NBFCs, which are totally dependent on SME only. And then it came to the requirement of credit of NBFCs. When the cash flows were challenging, NBFC will have challenge to run their shows. And then banks stopped the tap on the lines that it won't be priority sector. So bank has controlled their tap on the funds for NBFCs because RBI have marked some stipulation on that. And another point is, yes, banks were stopped funding to the NBFCs on the lines of the credit rating. The way we are talking about 9,000 NBFCs having 2.3% exposure of the total, out of total is net credit of the NBFCs, but their cash flow was really hampered during that period. So raising capital is the first biggest challenge NBFCs face. First, banks stopped the tap. Then second, CDB also stipulated specific rating for the NBFCs that those only will get AAA rated companies will only get fund. Then bank borrowing was also reduced, and there was not much equity infusion in NBFC during that period because people were out of they are not come out of shock after IL&FS challenges.
Correct.
I'll put it that way. Yeah. Then second is automatically because of funds expansion has become a challenge. During pandemic, branches, since we put NBFCs into essential services, we were supposed to run all the shows. We run the branches, but people were not allowing our team members to get into the villages or semi-urban areas. That has created a challenge for us. So that has created the growth challenges. So last few years, yes, we did face growth challenges because of the pandemic, and because of that, yes, consolidation was has to happen because any company has to survive. It has to consolidate on the cost in such a such a situation. So it is consolidation by way of a good part was. During this all pandemic, as already I told you, we learn how to run the business without branch model. So that has reduced the cost. Which has really consolidated the cost because we don't need the branch now. We can run the show without the branch. We can monitor our people. They can source the business. They can put it on the systems for approval, get approvals, and only thing is that 100% cashless transactions has to happen. So this is one of the challenge. It is challenge as well as opportunity because when we are saying everything will be cashless, that means we are leaving away the clientele who are dealing in the cash, and the NBFCs were expert, I will say, to handle that client earlier, and now also they are because all NBFCs not stopped those clients, but those are the clients which are not reachable by the banks, and they are handling only cash. Yes, NBFC is reaching to them. So these are the challenges we really faced, Sharad.
Sir, that is very apt assessment, and you have been actually experiencing that. So typically cost to income ratios for NBFCs, and given the branch expansion, causing a lot of challenges, because you are already troubled for raising the capital, as well as the cost of funds is increasing, because a rating is demanded, the higher ratings are demanded, and at the same time the business is not happening, because you are not able to expand as well as reach to the poor, these customers, due to various economic conditions, and as well as the unnatural conditions like pandemics and all. So I think that is very, very good insights we get. With your inputs on the challenges, I will request Bhatta sir to share the key challenges as per him for the NBFCs he has observed over last few years, and that would be very, very critical for us to understand from him, because again, the grassroots level NBFCs, they are the real replica of our economy.
So, Sharad, I think most of the points were covered by Prabhakar, but three things I thought I should add here. One of the critical challenges that are going to be faced going forward is regulatory, without a doubt. With the new regulations coming in and RBI trying to avoid an ILFS and the Diwan housing type of event in future, there'll be a huge amount of regulatory oversight, and this is here to stay. It is not a temporary phenomenon. It is here to stay. So the cost of compliance is going to go up significantly for all NBFCs. And this is a fact that most of the NBFCs have to take in mind. The second challenge that I foresee in the near future for most of them is capital. Capital is going to be a challenge, and given that this is going to be a challenge, it is going to be a thin line for most of them on expansion versus customer acquisition, how to do, which geographies, because unless there is expansion, the balance sheet is also restricted. Okay. And the third most important thing is, like Prabhakar sir was saying, the challenge wherein how much technology to be used, especially given that a vast majority of the 9,000 plus NBFCs are dealing with clienteles who are, I would say, semi-literate. They are very good in skill sets, but semi-literate. So my sense here is that is going to be one of the biggest challenges, because it's very nice to have technology supporting us, and that has given the pandemic, this kind of technology has got a boost. But if you see in India, especially the rural and semi-urban, a completely digital model, I don't think we are yet ready in the next 2 to 3 years. It has to be a combination of a physical touch with enabled by digital, what we call as phygital. Because these areas, if we expect people to just hop on, download an app, put in things, and then get ready, it is not going to happen. One is that the cost of setting up that is a challenge to many of the smaller and mid-sized NBFCs. The second is that the clientele, I feel, is not yet ready for this. Yes, given the things that are shaping up, given the data penetration, given that smartphone penetration is there, I think we are still half a decade away from this to happen. But thankfully, the things are moving in that direction where technology would play a big role in scale up. But I think these are the 3 points I thought I should be adding to what Prabhakar said.
Thank you, sir. I think that is very, very aptly, again, very illustrative explanation of cost of compliance, then your capital requirements and the technology, either side, customer as well as NBFCs. So I think you have actually gave me the another opportunity of next question, and which is very, very point in time. So I will request you to answer this, as you have opened this point, which is about technology. for financial services and typically non-banking financial companies which are offering financial services. And in financial services, what we are really selling as an NBFCs is promise. We are selling promise of giving some money and collecting it back at a predetermined time. Similarly, investment companies, they are also selling promise by collecting some money and giving it at some interest rate and some additional money at a predetermined time in the future. So both the places, it is about promise and contracts. So we actually run contracts with our customers as an NBFCs. Now, when we say this is the core business of promising customer something and making good of that and servicing that promise for the depending on the period. So in this context of managing this promise through technology is the only better and best option which has been identified over the last many years, because unlike the person who is lending in the local village and noting it down in his diary that so much amount is given to you as a loan and then immediately cutting 2% interest from the principal while handing over the amount. That is the old age of, say lending, one of the lending business model. But when we move to this organized NBFC structure, this becomes very important to be put into technology and managed by technology so that there is a transparency, there is a speed, and there is a customer satisfaction of getting it at in timely manner. So my next question with this preamble of financial services, the contracting, the management of those accuracy of the data and services. My next question to you would be, is that what do you think is the role of technology in performance of NBFCs? Does it help to address NBFCs challenges, and will it help positively, or would there be any additional challenges which will be posed due to technology? So to you, sir, on technology.
Yes, Sharad. See, before taking this question, I would also want to add a small preamble to it. Both you and Prabhakar are aware that any such technology that we talk today about, payments transfer to the accounts and all, was not thinkable around 5 years back. Right. To my mind, two technologies have changed the whole ecosystem, which has made India the fastest place and most exciting place in the digital space. One is your Aadhaar-based authentication, your digital Aadhaar, wherein you are able to authenticate or do the KYC at a fraction of a second and at a fraction of the cost. And it is digitally done. And the second is the Jandan accounts. Jandan accounts, I feel, has been a remarkable backbone for people like us, namely the fintechs and the NBFCs, because by this, what has happened is most of the families who are in challenged locations, I would use the word challenged locations, have an access to a bank account, which is functional. Now, what does this do? This addresses a very key problem. See, like you said, if I have to deliver a loan and collect the loan in cash, my cost of transaction is almost 18 to 20%. The cost of handling cash is 18 to 20%. Okay. Now, if I add my cost of funds on top of it and my delivery cost, I am somewhere around 30-35%. And I am as bad as a local money lender. So at 36-40%, at 3.5% or 3+% per month, how am I different from the local money lender? I am not. And that's a huge thing. And it doesn't make sense for anyone to come to me. But with this two infrastructure, what has happened? I can deliver a loan directly to the bank account, and with eNACH and other structural support that the regulator and the banking system has. Today, what I am able to do, I am able to collect the EMIs also digitally. Now, my cost of transaction has come down from 20% to less than 0.5%. Now, at 0.5%, I save almost 19.5% and I'm back in game. Even at 22%, it still is far cheaper to deliver a formal credit to the large populations by these two infrastructure. So I think these two fundamentally has changed the way technology has helped to deliver and collect loans. Now, the second part which I thought on technology, what is there is today, like I said earlier, the partnership between especially mid-sized NBFCs and fintechs is something which is a very interesting phenomena because we ourselves are into that space, and I can tell you that it is a plus plus for both the NBFC and the fintech. The fintechs are able to design alternate scoring models, get into new geographies, new customer segments, which other hitherto was designated as what you call risky business, very risky business. But given the technology, the way you are able to manage your manpower, you are able to collect, deliver, and get into new geographies with ease. Uh, this partnership with NBFCs is a win-win going forward, and this is only possible by way of technology. You have APIs today. Information can easily go into the tray of the NBFC. Decision making is flashed. So earlier, where loan end-to-end turnaround times was nothing, especially in rural areas on paper, it was almost 15 to 20 days. Today, that can be shortened to as low as 2 days. And in many places, it is within a single day. With APIs, it's so easy. Everything is parameterized. There's nothing. So this kind of customer delight, which is possible today, and which has helped with the payment technologies also coming in, is something that most people will look forward to. And this is only because of technology.
Certainly, I think, sir, you have given the complete perspective about the technology in NBFC, where nowadays the economy has become itself API economy, where everything is going through APIs, including your payments, including your India Stack services, your DG Locker, anything, Aadhaar card, validation, authentication, etc. And I think as a country, we are also far ahead amongst our Western counterparts in these technologies. The NPCI is a classic example. I will quickly share and would like to ask Prabhakar sir about his views on the technology adoption in the NBFCs, because this would be second last question, because we would be now nearing to our panel discussion closures. So sir, I would request you to share how the NBFCs are able to adopt technology. Are they on a scale 10, they are doing 8? Are they 5? And what are the challenges?
No, I think Sharad, NBFCs are doing at 8 to 9, I'll say, because today compliance is the biggest issue, as Indrajyothi has referred. Compliance is the biggest issue. We have to do CKYC. We have to report. Each and every NBFC has to report online after some period, after next September to RBI. So all these things, they have to do it. So they need support of the technology. Without support of technology, we cannot do anything. Earlier, we used to handle a lot of physical files. Now, after pandemic, our teams have learned how to do it without physical files. They started doing everything till disbursement without physical. Everything comes electronically and gets approved through LOS, and then only they start taking the physical files for documentation and disbursement. So all NBFCs are ready, and as you know, RBI has given a guideline that by September 2023, by September 22, sorry, by 30th September 22, all NBFCs have to comply as NPA classification also, or default classification, not NPA, default classification on day one. So without technological support, no NBFC can do that. So they have to go for it and they have to invest. So as on today, they invest more on technology, less on the manpower, I can say, or physical infrastructure.
Correct. I think that is very important point you highlighted, sir. Without technology, compliance would be very nightmare for managing the show, and it would be difficult even. I mean, matching with the RBI standards, and the standards are becoming stricter and stricter as we are talking about NBFCs as a shadow bank, and it is actually now recently HFCs, the housing finance companies. Control has moved from NHB to RBI for the regulation purposes. So slowly it seems that compliance is going to grow. So the last question I would like to ask on this technology part to Bhatta sir, about the key technologies which comes to your mind when, if you were to given automate and set up a complete techno-enabled digital NBFC, what are the 2-3 key technologies comes to your mind? This would be the last question on before we summarize our panel discussion. So Indra sir, your views on the key digital technologies that you recommend to our audiences.
So I don't think that today there are a number of technologies. So I don't think I'm qualified to suggest technologies because I'm sure that part of this audience are much more enlightened on this aspect. But I have a few thoughts which I thought I will share. It is very essential that today whatever technology platform that you select should be able to do two functions. One is that your macro environment is changing by the day. So when the changes in your customer perception, behavior, your products have to change, keeping in view with the with the modern time. Like to give you a classic example, last year and a half, I think around 2 years, from the last 2 years, this product of buy now, pay later has become a very, very roaring success with many of the players, wherein typically what was sold to customers was that you buy now, you pay in 5 installments, it will go. But actually it was a loan given behind every aggregator, and there were players behind, and where loans were given. Now, the point here, what has happened is, in one regulatory move, this whole product was put on a back burner. Now, unless your technology, whatever you create, is able to modify to a new product immediately, it will not be possible for anyone or any technology or any institution to modify that and move fast. So that is where I think that whenever you are building a technology, you should be able to quickly adapt to the changing times in the macro environment. That is one. The second important part I feel is that because the clientele that we are dealing with are, I would say digitally, I won't say challenged, I would say they are learning up the curve. So these people need a lot of assistance. So the customer or user experience that you want to give is going to play a critical role, and this one going forward, because slowly and steadily we will have to develop those kind of technologies which encourage do it yourself. Like Prabhakar was very clear that going forward, more spends are going to be done on technology rather than manpower. So what will happen is the span of control of every single resource is going to be stretched, because you are digitally or you are enabling him technology wise So that a guy who was handling 100 customers today is expected to handle 200, 300 to 400 customers. How will this happen? Your architecture has to be so nimble, and it has to be at least having that design or that what you call space, wherein there is a component of adoption of do it yourself as you go it forward.
Correct. So, sir, I just wanted to stop you here, and just to summarize your point, basically you are recommending that technology should be flexible, and for the end customers it should be largely do it yourself, so that they will be able to adopt faster, and NBFC's cost to income ratio will go down, because the efficiency will increase with the help of this technology. So I think with this we come to the end of the session, and it has been very thoughtful inputs we have been able to get from both of you as a stalwart in the industry. What I would like to summarize with some slides the whole discussion in a very fast forward mode, and request the host to share the PPT. And so we had today role of NBFCs in Indian economy discussion with Prabhakar sir as well as Indrajyothi Bhattacharjee, and lot of interesting facts and figures we were able to get. So we saw that how many NBFCs are there, and what is their contribution. Let's move next. Then we discussed about how they are contributing to the nation building through the employment generation, through the efficient resource allocation, FDI generation, and then development of core sections, including credit to manufacturing and the SME sectors. Next. Typically, NBFCs, as both panelists pointed out, that they are getting into niche. They are geography focused. They are focusing on a niche products. They are focusing on niche customers, and that is what has made NBFCs, darling of the customers. Whenever they want to take loan, they go to them first rather than banks, because they feel banks will be more tedious to deal with. Next. So this I will skip, because there are many initiatives which have been launched by RBI to restore NBFCs, including co-lending initiatives to increase, the most flow. Then they have made banks, whatever NBFC lending they do, as to treat it as priority sector lending. And the RBI is easing the money flow to the NBFCs. That is the larger story. Next. Now, key considerations for sustainable and profitable growth of NBFCs would be typically, as Prabhakar sir pointed out, growth on revenue is very important. How to enhance that, then optimizing cost, and of course, building governance and risk control. These are the three critical themes that emerged during the discussion. Next. So, if typical opportunities for NBFCs are many, it's vast number of opportunities where NBFCs can find out new revenue streams through e-commerce, asset diversification, sales force efficiency improvement, and then existing revenues they can increase through fee incomes, sales force efficiency again, and tie up with the fintechs. Let us stress on this point as a summary. Move to next. So with fintech capabilities and NBFC capabilities of access to credit, large customer pool, robust collection process, and domain expertise, I think fintechs are going to play a very, very critical role of crowdfunding, P2P lending, new age technology like India Stack, superior customer experience by do it yourself, seamless partner integrations with aggregator companies, and any other invoice discounting, GST integrations, anything which will give ability to select the customer and collect the money from the customer. I think that is where bringing together fintech and NBFCs is going to play a large and critical role. Next. Now the last point, governance and risk management. Of course, the human beings have limitations. So analytics, artificial intelligence, mobility, and cloud. These are the 4 investments which will help NBFCs to build a stronger governance. I think this is the large summary of the discussion of the panel over last 40 minutes. And I think with this, I'm very thankful to both the panelists, Indrajyothi and Prabhakar sir, for giving their valuable inputs and sharing their heart here for all of the audiences. Thank you very much. And I would like to hand over to the host. And
thank you, sir. And I'm just mind blown by the role of NBFCs and the huge role that they can play in our aspiration for a $5 trillion US dollar economy. Well, I'm pretty sure our audience has a lot of several questions that they've been sending us, and we've also sourced a couple of questions through social media. So let's open the floor for a Q&A session, and we'll get started with the very first question. And this is for Prabhakar sir. So you spoke about the evolution of NBFCs and the role that they played in the pandemic, right? The challenges and the challenges and also the benefits that the NBFCs provided. So I just wanted to know, what do you think is the future of NBFCs in India down the line?
Down the line, yes, NBFC will be there and it will be there part of the economy, because reaching to the last mile to the banks will be high. It will take a lot of time to reach all 5 lakh villages for the banks. So unless and until banks reach there, somebody has to take care of the credit requirement of the last mile person, and NBFCs will be there. Right now they are there and they will continue to there to do the business. So no doubt NBFC will be there. There is a good future for them. Only some hiccups are there, like pandemics, that will continue, because I think NBFC people are really used to taking such challenges. So I don't think there is any anything we can say that NBFCs will not be there. They will be there, and there is a future.
Thank you so much, Mr. Prabhakar. I think that also partly answers my next question that I had on my list, was that what are some of the advantages of NBFCs over traditional banks, which you very clearly sort of pointed out, because they cover the last mile sort of approach to, especially to tier 2, tier 3 credit seekers. So let me just go next in line to Mr. Sharad Jambukar now. Mr. Sharad, can you please list down some of the financial activities that NBFCs have to indulge in? What are some of the financial activities that we can look at?
See, for a very short and quick understanding, if one should have of NBFC's activities, I will simply tell to select the customer and to collect the money which we have lent to the customer. These are the two critical activities of NBFCs. Now, here, the most difficult part for the NBFCs is to collect their money back. Lending is very easy. Distributing money is very, very easy. But collecting is very difficult. So coming to the NBFC's business models, their key activities are the select customer through proper underwriting norms, having the proper policies, identifying and exercising the proper eligibility checks for the borrowers, and then doing the KYC to comply with the land of the law, and then ensuring that we are able to collect money through various processes of touching base with the customer, giving him many options of servicing the loan, and putting his account in a statement of accounts manner. So these are the typical 4 or 5 activities which formulate NBFC core. And if credit assessment and collection, these are the 2 core activities along with managing the compliances as per RBI regulations. That's it for the NBFCs.
Thank you so much. Thank you so much.
Thank you for the answer, sir. And I think we have a couple of questions on our chat. So we'll actually combine 2 of the questions. One is by Pavitra R and the other one is by Jerome Pratik. So these are completely questions for compliance and guidelines. So how many different types of NBFCs are registered with RBI? And is it necessary that every NBFC should be registered with RBI? Just generally, what are the guidelines that an NBFC must follow? And we'd actually like to open it to everybody. And again, feel free, any of the panelists can feel free to answer the question.
Vaishnav, it's like this, that to lend money in India officially, you should have a license. So that is why if you see many of the Chinese apps, so-called Chinese apps are under fire because they don't have a license to lend and they don't come under any regulatory framework and fleece people on that. So today, if you want to legally lend money, you need to have a license. And the license is of two ways. One is a banking license and the second is a non-banking finance company for NBFC. So there are different capital norms that have been advised by RBI, and you need to apply, and they would give you an application basis your merits. One, two, three things that they consider is one is who are the promoters, what is your line of activity, does this kind of activity is required in the country, that is in terms of priority, and likewise they will evaluate and then they will give you a license. Now with this license you can start your business and then take it forward. Now, NBFCs are broadly two types. One is a deposit taking. See, unlike banks, NBFCs cannot take deposits. So, only certain type of NBFCs today can raise long-term deposits. Like example, housing finance companies like HDFC Limited, etc. They have license to raise money from the public by way of long-term what you call fixed deposits. But these are very few. Most of the NBFCs are not allowed to raise money from the public. So hence, they have to be adequately capitalized, and that is where the broad guidelines are. This is just for layman's. This one I have given this. Of course, there are lots many regulations on everything I've said, but this is broadly how the market is structured. Sharad
I'll just
and
add
Prabhakar, you can add.
I'll just add one point is most important, Vaishnavi, is RBI do look at the minimum net worth for before issuing the license or considering the application for license itself. They have defined the minimum net worth requirement for consideration of the license also.
So apart from deposit and non-deposit taking, there are 12 types of NBFCs which RBI has classified.
Yeah.
Typically, investment and credit companies, infrastructure finance companies, infrastructure development finance companies, NBFCs microfinance, factor, NBFCs in factoring, then NBFCs for P2P lending, asset reconstruction, mortgage guarantee companies, account aggregator recently added, housing finance companies, and one is CIC, that is credit companies, one type is there.
Great.
There are 12 companies which RBI has classified, under which it can be registered.
Perfect. That brings me to the next part where you have already spoken so much about the role that NBFCs play in developing the Indian economy and reaching out to the last mile credit seeker. Are there any policies, support, or interventions that have been in place or are in consideration to be put in place to aid the development of the sector that comprises of NBFCs, or to just strengthen the operators that are already in the market?
Yes, there is all these NBFCs are regulated by RBI. RBI regularly puts the revised guideline on regulation, and there is a strict regulation by RBI, just like banks. Recently, RBI wants all the NBFCs to come at par with the banks on credit monitoring and default mechanization also, as well as earlier whatever difference was there on CRR, SLR in case of NBFC and bank, that has been also almost brought it to at par for large NBFCs, or not for small NBFCs. So that is the reason it is pushing. So indirectly, we can say RBI wants big NBFCs to be converted into banks for that reason only. That is the reason we have seen HDFC Limited getting merged into HDFC Bank. So yes, regulation is very strict by RBI, and they closely monitor all the NBFCs.
Perfect. Thank you so much for clarifying that.
Thank you for the primer. It was explained in a very basic and understanding manner without jargons and stuff. So we really appreciate that. And moving on to the next question, and we spoke about how NBFCs can work together with fintech players, right? So what are the benefits in a collaboration like this between NBFCs and fintech players? So again, this is open for all the panelists.
So just to give an example, we are one of those just startups. So I had a slide. So if it's possible for the person to show a slide, I can show you how the participation happens between an NBFC and a fintech. So the slide was there on the second one. So if it's possible, the next slide, please. So here, what happens is that NBFCs have capital. Fintechs, on the other hand, have niche products, alternative scoring models, and are able to deliver credit at a much more efficient pace because of the technology and this one. So the lending portion, many of the fintechs like ours are partnering with NBFCs so that we could have a win-win situation wherein we use the capital that is available by the NBFCs to build their own book as per the credit guidelines which both of us sit across and design. So you are able to get new customers, new products, new geographies in a very what you call homogeneous manner, and it's a win-win situation for both the fintech and for the NBFC. Fintechs give you the reach, the technology of reaching new customers, new geographies. The NBFC is benefited by way of increased book size, new products, and cross-sell opportunities to these customers. So it's a win-win for all. So I thought I would show this and explain it, which becomes
Right, and very important point, sir, I would like to add to this is that the joining hands with fintech actually gives them immediate access to high-end technology where they do not have any wherewithal, and with that they are actually becoming more productive and reachable to their customers.
Thank you, thank you so much, everyone. This has been a great session for not just the participants, but Vaishnavi and me as well, to be able to understand the world of NBFC, even though we don't come from that background. So it's been a great learning curve for us as well. So I'm going to take this opportunity to thank you all so much for taking your time out and joining us here today and speak about a topic that is not only just relevant, but also has a lot of potential to take the Indian economy to greater heights. So on behalf of the Tether community, M2P Fintech, my co-host Vaishnavi, and personally, I thank you for being part of today's event. Thank you so much.